So I think like that will go up to 10-15 million dollars of TVL, and people will then start caring about yields as well.
In terms of social trading's prediction marketplaces also roughly fit your framework. Although they're not coins, you can use another coin to bet on an outcome of a social event.
The Solana Labs recently announced token standard called, like, not even a token standard, but you can assume that to be a token standard. It's called token extensions. So what it does is like it.
Hey everyone, welcome to another interview. I don't know if you can call it an interview, but it's just a chat with people in the crypto space. I think this is episode number 2, and this is a little bit more interesting because we have an analyst, a researcher, a writer. He does a bunch of things. I have Yash Agarwal with me. He's a prolific writer on all things finance. You've written a lot of articles on your Medium. I think your first Solana article went back to 21, if not earlier than that. He maintains this on his Medium, so check it out. I will be sure to link that here. He's also a researcher at Super Team. He writes all the Substack, or all or many of the Substack ones, certainly the interesting ones. In this interview, we want to talk about Solana because I think that's your core research interest. And particularly 2 articles that he's written in the past few months, right? We're recording this in March 24. And he's written 2 articles on the state of Solana DeFi and a long note to builders who want to build on top of Solana DeFi. So those are really interesting things, right? So let's start with that, Yash. What is the state of Solana's DeFi?
Yeah, sure. So, like, as you can see, like, Solana's TVL has now grown to almost $4 billion. It was like around $250 million, like, you can say 7-8 months ago, and like that has been mostly due to the price appreciation, as well as like a lot of teams announcing airdrops. So we have now like Camino's airdrop coming, then Margin coming, and so on. So I think like there are a lot of airdrops coming, and that has propelled the DeFi activity to a newer height. So I think like that has been a one reason for the TVL part. On the volumes part, meme coins have been a very big factor here. So if you can see, like, a lot of new meme coins are coming on Solana. All the retail participants are coming to Solana for trading these meme coins. So that has ballooned all the DEX volumes. So you can say combination of airdrops plus memes, like this 2 combination are driving all the Solana TVL and volume, which are like the 2 most important metrics in DeFi. Apart from that, like, I would say like there are around 50 quality teams right now in Solana DeFi, or I like to say them like Solana DeFi blue chips. Like those are like kind of like building and attracting all TVL and volume. So I think like those are like the most important part of Solana DeFi. Those are like 40-50 odd teams, and like there are very like new protocols also coming. But yeah, most of the activity is being driven by like those 40-50 very high quality teams, like, which is like kind of, you can say, strength of the Solana ecosystem right now.
Understood. And I think you've put out a good measure of activity, right? People go by TVL in isolation. People go by DEX volumes in isolation. I think you call it velocity or something, I'm not sure. But you look at DEX volume by TVL or something like that. Why is that such an important metric?
Yeah, sure. So, like earlier, people have criticized that TVL is a vanity metric, and you can like put any tokens in the DEX and just call it a TVL and so on. So, Ethereum automatically has a lot of TVL, right? Because like ETH has a asset is also like very highly valuable, and those are like put into a lot of DEXs and so on. So Solana historically didn't have like lot of TVL, but it has been processing like decent enough volumes. So what Solana community like last year started telling was like volumes are more important metric than TVL. So last year, like, one of the tweet like came out by one of the people who works in Solana Foundation, that like we can call like volume by TVL as capital efficiency. That is like, let's say if $1 of TVL is doing like more volumes, then like that capital is more efficient. And I like to call it particularly like capital velocity. So if you see like if there's like lesser capital and more volume happening, that's like a positive thing, because you're locking up very few capital, and then you're doing more economic activity, because volume is like kind of a proxy for economic activity. So like when I ranked on that front, like you can take any time frame zone, like in Solana will be the top on all major chains. And like if you also like include like other low cost chains like Sui, Aptos, or even like any L2s, like Solana is like mostly 5x, 10x, or even 50x of those metrics. So one of the major reasons has been that like Solana has two, three dexes which are very capital efficient. One is like Phoenix, which is an order book on Solana. Another is Lifinity, which is like a Oracle based dex on Solana. So like this dex is like has hardly like very few TVL. Like Lifinity has only $6-7 million of TVL, but it processes much higher volumes daily on a daily basis. Like it's processes somewhere around like 200 to $300 million on daily volume. So uh, this DEX is like automatically pushes the Solana's capital efficiency, or you can say velocity, to like very higher levels as compared to Ethereum or any other chains for that reference.
Okay, you mentioned capital efficiency, and I think that's an important phrase, right? So how do you explain that to someone who understands typical TradFi, studies balance sheets or something like that, right? Or understands traditional companies. How do you explain that to them why this is such an important metric?
Sure. So I think like one like there are like lot of, you can say, like fundamental ratios, right? This is like kind of similar to any other fundamental ratios where like if you see like price by like equity or any kind of fundamental ratios, they are like mostly having like one metrics on the numerator and another metric on the denominator. So like you identify which metric is a good and which metric is a bad, and just divide, and you arrive at a fundamental ratio, right? So here basically like we can say like TVL is not a very good metric for DeFi, because like locking up just capital, and like particularly for the DEX, like for lending borrowing, TVL is obviously the most important metric, because the task of a lending borrowing project is to like attract a lot of capital and lock that capital up. But for a DEX, the primary task of a DEX is to process more and more volumes, like do more and more exchanges. So for exchanges, obviously like volumes are the most important part. And if you have like much higher capital efficiency, your LPs will automatically be more profitable. So if you see like all the LP yields is simply calculated by how much capital they are putting in, how much fees they are generating. If there are a lot more volumes, more fees will be generated, and that way like the yield of LPs are very highly profitable. And if you value any debts by any sort of metrics, the revenues earned by LPs are like very big, good metric, that how much that DEX is making for its LP, which is like kind of a stakeholder, right? So that way, like if the DEX is more capital efficient, so it will automatically generate more revenue. So again, going by the same example for Lifinity, so Lifinity is like doing around $1 million of monthly revenue with only like $6-7 million of capital. So in fact, like the original Lifinity capital pool is of only $1 million, but they have accrued $6-7 million only by revenue, and that's why like TVL is like around $6-7 million. And they have also distributed a lot of like revenues to its like NFT holders and their holders and so on. So I think like that's a good example here, that like if TradFi understands revenues, then like capital efficiency is one way of leading to more revenues for LPs for the capital they put in.
Got it. So you said if TradFi understands revenue, then they will understand, and then they'll understand capital efficiency. And if they understand that, then they'll know that the most important, or one of the most important outputs of a blockchain or an application layer on which applications are built, like Solana, is DEX volume, because that is certainly one of the largest type of DeFi protocol on Solana. That would be an output. The input on that would be the LP, the supply side, right? The LPs who supply the tokens that will eventually be swapped as a DEX. So if
Yeah.
the degree of swap is a higher multiple than the degree of input tokens, then that means that the application layer is working well. And therefore, you can relatively measure that with other applications layers that aren't working so well. For example, right? For whatever reason, whether
Yeah.
it's high fees, low throughput, etc., etc. Um, is that a core function, or is that a core attribute of Solana right now? And will that be like the bigger sell to bring in, say, the traditional investor to say that, look, Solana is such a useful application layer where the output is more than the input relatively and absolutely.
Yeah, definitely. I think so. Let's say if let's say forex trading has to happen on chain, so if they have to do it on Ethereum, like obviously it's not efficient. Like you can't do like lot of like smaller swaps, etc. And another important thing is like most of the traditional traditional market making is happening on the order books. Like AMM doesn't exist in the TradFi, right? So like right now only like Solana is the only chain which is doing like lots of like more than $100 million of daily volumes in order books. Like there are like order books in other chains as well, like Aptos, Sui, but they're still like getting started. But Solana has this like order book which are like battle tested from the past. One order book is battle tested from the past 1 year, another from the past 2.5, 3 years. So I think like Solana has a very good order book infra which like TradFi can understand. And once they understand that, okay, you can do all sorts of like exchanges here, you can do market making here with like very low cost, etc. Then obviously like TradFi will understand Solana more than Ethereum, right? Right now, like if you see like Ethereum has a very strong like point on like it's the number one smart contract chain, and it has a lot of amount of capital, and it has a asset is also like very high, like very high in market cap, so automatically a good economic capital. So yeah, obviously like Ethereum would be the first choice for any institution, but I think Solana is de facto second choice for any institution. So even BlackRock, I think like first it will launch on like it will launch on Ethereum, like it has already launched a small fund. But I think like then it will automatically launch on Solana, either like on the Solana mainnet or maybe like even as a Solana app chain. Not sure on that front, but yeah, definitely like Solana would be the second choice for any institutions going forward.
On that, right, you touched upon BlackRock. I think you've put out a recent tweet on Ondo Finance and for real world asset tokenization. And funnily enough, your Twitter bio reads tokenized financial investment. What is that like? I think that's a big or that's a big point of research for you, where you want a lot of on-chain assets that represent real-world assets. Ondo, an example that does that. Can you explain like the flow of funds that Ondo does and why real-world assets on the blockchain is such an important aspect for blockchain for the growth of, say, on-chain finance? A, independent of getting TradFi, and B, with the TradFi, with the big money coming in.
Sure, sure. So, if you look at like Ondo Finance, like what it is right now is like simply a wrapper for treasury bills. So, like what it does is, let's say if you have 100 USDC and you want to invest in like any Ondo like fund. So, let's say they have a like OUSG, so which is basically a short-term treasury fund. So, in that, like either you will have to be a accredited investor or an accredited institution. So that is like permission part. So let's say if you are an institution and you put like $1 million there, then you can simply like put in Ondo Finance, and they will off-ramp that amount via Coinbase, and that amount will be invested into the treasury bills, like and held with like all institutional custody partners and so on. And you get a token, which is like a representative of that position of like where they are holding the treasury bills. Now they have a second product, which is a permissionless product, and that is for investors like me and you, where we can invest 100 USDC as well. So in that, like you get like treasury, like the exposure of treasury bills, but in the form of token, which accrues value daily on the basis of yields, like which the treasury bills have accrued. So it's like kind of a wrapper on the first product. So like Ondu currently has just two product, and it's still like you can say like not a very big product or anything like that. But I think like right now the hype of RWAs are like getting stronger, and more people want more institutions on chain. Like BlackRock has already experimenting. Franklin Templeton is like very huge on RWAs, and then like we will see like Fidelity also launching some funds like later this year, and like in fact like Citibank is also planning. So I think like around of out of the top 20 big institutions of the world, like mostly 10, 12 institutions will be launching a fund like either permissioned or permissionless this year for sure. So like with all this hype, like everyone wants to get on the RWA hype, and like Ondo is like one of the few players which is already live and has some traction. So that's why like players like Ondo, and like there are a lot of other players as well which hasn't launched token yet. So like that's why like they're not hyped that much, but will definitely be one to watch for as more and more institutions come on, because everyone want some token exposure, right? So yeah,
Okay, but just to play devil's advocate, right? I'm talking about from
yeah,
the newbie non-crypto user perspective. Why would they care if some asset like a treasury bill that is considered the safest of the safe investment is done through an unsafe means or perceived as an unsafe means through a tokenization
yeah.
form? Is it only to make it permissionless where that accredited investor tag is removed and now I get to use it? Or is there some more consumer ease from tokenizing real world assets?
Yeah, so right now, if you see, the UX is even worse than TradFi. In Trad, like, so let's say if you're investing USDC, you have to go through all the KYC factors, and even in the backend, like there's a lot of things happening. So it's like kind of going the reverse direction of the UX part. But like later down the later down few years, I think like what will happen is like most of the assets will come on chain, and now like globally everyone has the access. Like earlier, they will have to like wire funds here and there, and once regulations start kicking in, then like most of the global participants can participate in any market. So I think like the bigger game here is like most of the securities also start being issued like primarily on blockchain. So let's say if there's a small stock market and they want to make it completely on chain, they can like launch on any blockchain, and that can be like they can have some regulations in place, and that way they can control the entire thing, and that way they can open the financial market to everyone in the world, because once it's on blockchain, anyone can invest, and like anyone can invest using USDC or any other stable coins. So I think like the global access part would definitely be solved in the coming years. Right now the regulations are still not here, everything is very permissioned, and the UX is like not the best. Coming in the few years, we will definitely see like lot of good UX improvements here. Another thing is like kind of like using that like RWA position in the broader DeFi. So I think like right now, if you see like the biggest on-chain plus point is that like there's a lot of leverage, and the money moves quite fast. So even USDC, if you see like last year did around like $8 to $10 trillion. Like it's like just behind Visa's total volume. So I think like stable coins have been doing a lot of volume. So once they are permissionless, then I think the real game starts, that people can start using that as a collateral in lending borrowing protocols. They can leverage it like 100x, 150x. They can like do lot of volumes on a daily basis. So I think like all these like real world assets, once they are permissionless and they have like proper regulations in place where anyone in the world can access that and tap, and like these real world assets can tap into the global liquidity, then the bigger game begins. But yeah, right now if you see like in the next 1 2 years, UX won't be the best, and everyone is just figuring out like how to make the UX the best and like how to make it composable in DeFi. But I'm more bullish on RWA being composable with the broader DeFi, and the current protocols are right now just being battle tested for this RWAs to trade trillions of dollars in the next 2 3 years or maybe like later. But yeah, I think like all these protocols are right now just battle tested for RWAs to be traded later. So yeah.
As an application layer on which these assets, RWA assets, will exist, how does Solana do good or bad from an application layer, A, and from applications that are built that support these RWAs? Is there any particular ones that you're seeing that are just like, okay, these are the ones that are at the forefront of support for RWAs?
Yeah, so Solana recently, or like the Solana Labs recently announced a token standard called, like not even a token standard, but you can assume that to be a token standard. It's called token extensions. So what it does is like it gives like 12 13 features, and you can mix and match. So one of the features is like you can enable only that token to be transferred to who is there in the whitelist address. So let's say you like BlackRock can maintain their own whitelist address, and once that is enabled, one can only transfer token to person who has been whitelisted. So what it enables is like essentially you are making a token permission, but on a permissionless blockchain. So like you can interact in DeFi, but only with people who have already like been KYC. So I think like that kinds of replicates the financial financial info of like TradFi, but on a permissionless ledger. And then you can explore like lot of other like possibilities, like composing that with the broader DeFi and so on, like while being compliant. Another feature of that is like you can also enable like transfer tax. So let's say if a TradFi institution wants to enable taxes on each transfer, they can have like 0.1% fees on each transfers they are doing. So I think like token extension is like one way, like with Solana as a you can say ecosystem or Solana Labs as an entity is like trying to promote for RWS. But till now, like I would say, like the RWS and Solana have been a bit underwhelming only. Like no significant RWS has gotten like a very good traction. Like there are like obviously like 10, 15 players, but everyone is like below $100 million. And like Ondo is also on Solana, for example, but their traction hasn't been like that great. Like they're just doing like around $1-2 million of market cap right now. Still, the thesis hasn't been played out of like using token extensions for RWS or anything like that. I think like in the next 6 months or 1 year, as institutions start coming on chain, they will look for issuing all the assets like on a permissionless ledger like Solana, where like everyone can like they can compose with other places as well, but they will definitely be looking at token extensions where they can have some like checks and conditions in place so that like if they are like anything in the regulatory aspect, they can let's say revoke the tokens or claw back the tokens and so on. So I think that will happen. Another thing like I'm bullish on is like kind of PayPal issuing their stable coin. So PayPal will be launching on Solana like I think pretty soon, because the issuer of PayPal USD is Paxos, and Paxos already has a stable coin on Solana. So it's like very obvious that PayPal will be on Solana sooner or later. And once that happens, like PayPal has very big ambitions. They want to payment methods for the merchant as well. So like anyone can pay via PYUSD and so on. So and they also have like NYDFS license, which is like the New York license. That way, like they can push a lot of real world adoption as well, like real world and even real world asset adoption as well. Because once PayPal enters the game, other institutions will also like to compose with PayPal and can say like let's say buy tokenized gold using PYUSD and so on. So I think like the entire flywheel will kick in once like the initial like traction has been achieved. So I think like there needs to be just like more and more institutions coming on chain, and they just need to cross the first $100 million or $500 million mark, and then I think like the flywheel can kick in, just like we saw for USDC and USDT as well. Those are like stable coin, like USDC and USDT alone is like around $140 million, $140 billion. So I think like in no time we can reach the same adoption for the real world assets as well.
I think the two themes that I'm seeing, right, is one is investments, the other is payments, which is probably the two main use cases of money, or
Yeah,
besides like storing value, both of which can be done on Solana. You can have quick payments and you can have on-chain versions of real-world assets, and it makes the end consumer's job easier because they can invest easily, permissionlessly on any real-world asset, from a meme coin to a UST bill, and they can also make payments to any merchants that accepts on the other end, possibly when on if
yeah.
PayPal comes on Solana with PYUSD. Cool. I think based on like the article, right, that the one that you wrote, I think we've covered a lot of things. The two things that I wanted to cover, which can't be immediately or easily be segued in, is staking. And I think you've put a strong point that staking and restaking services will be a big building use case in 2024. And this line that you highlighted, which is interesting, right? You said that the amount of SOL in liquid staking services is 5% compared to say ETH, which is close to about 20%. And even though staking yields are pretty high on Solana, why are there so few services, in your opinion, for staking on Solana?
So right now, if you see like most of the SOL is natively staked, like they are not in LSTs, and that's something to do with the design problem as well. So in Ethereum, like LSTs like took like has a wider adoption just because like in Ethereum, like there was like you can't withdraw your ETH and so on. So that way, like most of the people preferred like staking via LSTs. So that's why like LST got a wider adoption. But in Solana, if you see like the native staking withdrawals were like live from almost the first year itself. So like most of the people prefer native staking because like if let's say you have a very big bag of SOL, like let's say $1 billion or $500 million, then you won't like to take a smart contract risk of like putting in an LST where like they have been battle tested, but still there is some smart contract risk. So when you can have like almost zero smart contract risk, like you would prefer native staking, right? So like native staking has been a bigger thing. Another thing is like most of the locked soul, they are natively staked. So like those also account for native staking and not in LSTs, because you can't stake your locked soul in LSTs. So like most of the locked soul were in like 2021 by the investors, etc., were natively staked. This were the main reason like LSTs didn't pick up initially. But right now, like most of the soul is being unlocked, and we are seeing like most of the LSTs are now being widely integrated into DeFi protocols. This adoption will grow. So right now we are at 5%. I think like it would be like 10, 12% by the end of this year, because more and more soul will be put into DeFi, and that's very important. So even like if you see the current DeFi TVL of any chain, be it Ethereum, Solana, like mostly like it's 70 to 75% LSTs only. That LSTs and stables, like these are the two main assets, like with apart from the native asset which is Sol and ETH, like these are the assets will contribute to the most TVL. So you either like need like a lot of stable coins, which is USDC and USDT, or you need lot of LST. So I think like LSTs can very well serve that purpose for also increasing the DeFi TVL. And if Solana wants to grow in the Sol terms of TVL, we need more and more LSTs here, integrated into DeFi, put into lending, borrowing projects, and so on. LSTs would be like a major theme like going forward, as Sol as a asset also keep rising. Like again, like Sol is right now 80, $90 billion. It would be obviously, if we see like the bull market rising, it would be a $200 billion asset. So LSTs, like even if you capture let's say 10% of that, it's like $20 billion. So at least LSTs are definitely a big use case and a big enough market that even new players can launch their LST service and grow very rapidly. So yeah, that's why like I'm a bit bullish on Solana LSTs, that like more and more LSTs will come and they will be integrated into DeFi protocols.
How would they? Because in the article you wrote about, if a roll-up app chain thesis picks up, then restake it could be huge, right? So do you think that the way this thesis could be big is through a separate roll-up app chain where staking becomes its own sort of sub chain or an app chain within it, but most of the value accrues to the main chain?
Yeah, so I think like there's a difference here. So staking is just like staking your soul. Restaking would be like kind of putting your LSTs and then securing some other networks. Now that networks can be anything, right? So even in like in Ethereum, that network is not clear. Like which Eigenlayer calls it AVS. That can be a bridge. They can be either a roll up, or they can be any Oracle service, etc. So I think like in Solana we already have a Oracle, you can say app chain, which is Pit Network. Like Pit Network is on a Solana, or you can say SVM fork. So in future, like Sol can also be used in an asset. Like if let's say Solana app chain thesis picks up and we see more and more roll-ups or even like app chains coming on Solana, then like those Sol can be used as a security, like as an economic security thing, because Sol as an asset is growing and it now has a sizable market cap. So it also has that economic security value which Ethereum had like let's say 1 year ago. Now we can see that like more and more Sol as a money meme coming as well. That people will be saying that like Sol is now also like generating a lot of fees via lot of activity and so on, and Sol is also like becoming ultrasound money like Ethereum and so on. And when that narrative kicks in, like people will be searching for sources on like how this Sol can be used more and more, and like restaking is one way. So like restaking can pick up, provided like there are a lot of networks which this Sol can do. So if like rollup or AppChain thesis picks up on Sol, on Solana, I think like Sol as a restaking narrative can picks up, but again also depends on like how it plays out in Ethereum, because right now we haven't seen anything like going live with restaking, right? Restake, ETH, and so on. So right now it's just like a kind of a narrative play. But yeah, in the next 1 year, we will see that if restaking actually has a use case or not.
Awesome. One of the more popular parts of the article that you've written, right? And certainly right now, as we're at the middle end, I'm not sure of the meme coin frenzy, is meme coins as social trading. And that's interesting because it is a very social phenomenon on the supply and demand side, where a lot of influencers sort of prop up and create and pump these coins. And we have various themes, like I think political fi is one thing where people are making coins on political candidates. Animal fi is the other, where people are making, I mean, they've always been making dog and frog and cat memes, now with hats or something. Um, just wanted to understand how will meme coins become more and more of a social asset class, especially in crypto where it's permissionless, it's penny trading. You can trade a small amount as well. How will that happen?
So I think like the beauty of meme coin is more on like how the form is. So let's say if you have to previously bet on anything, like it would be mostly binary, right? So right now, like meme coin doesn't have any cap. Like the Joe Biden coin can even go to like 1 billion market cap or even 100 billion market cap. There's no cap. So like that introduces like another like kind of uncertainty, or like you can like have like any size of returns. So I think like that makes like meme coin trading like quite like you can say interesting. It's not, it's like very continuous right now, that like you don't have like specific or discrete outcomes. Like the prices are continuous and you can like make any amounts of money. And that's the reason I think like the meme coin trading has like picked up very lately, that like people, like even a normie people will understand like how you can like make even 100x returns, or like even like lose all the money and so on. So I think like that way, like if the like memes also understood by like most of the people, like not just in crypto, like most of this meme, like let's say Joe Biden, like that's like kind of a universal meme. So like that way, like it's like kind of you can say more inclusive, and like any normie can also participate, and like everyone can understand, because you can just say like it's a stock, but like it's for a meme. So that way you can say that like we will see like lot of like people participating in this meme coins. But yeah, like on the social aspect, I think like someone will create like kind of start creating like vertical meme coin platforms. That can be like, let's say if someone wants to create like a political meme coin platform, then it will have like all the political things and everything will be embedded in that. Again, like will that work or not, or will that like kind of just make process a bit complex? That like right now, you see like memes are very silly, and that's where like they get all the value. So we are not sure like whether like that will work or not, but I think like we will definitely see like few platforms coming which will be for a particular niche. Like it can be even for, let's say, a sports event like IPL, or even like for a political event and so on. So we'll have like different meme coin platform for different niches, which even normie people can understand. They don't have to look for on-chain data or go for Birdeye and look at like different other meme coins. Someone will create that as well, because like meme coins have a good amount of TAM. If you see like the like in Solana itself, like there are like multiple billion-dollar meme coins. So I think like definitely there's a huge market, and volumes also, like meme coins are daily doing like more than $1 billion volumes in Solana itself. So definitely there's a lot of market here, and someone will start like thinking about like how can we make it more social. I think like that would be more interesting than like creating another fork of Twitter and just adding Connect Wallet there. Take like something very crypto native and then make it more social and apply gamification, rather than taking it something like very web 2 and just applying token there or like Connect Wallet there. We will see like social platform emerging from the meme coin, or like even like not even from meme coin, maybe like from some other DeFi sector as well. But gamification of DeFi will happen faster than like DeFification of games, like which is like I'm bearish on P2E games and bullish on like more and more gamification will be embedded in the DeFi protocols itself.
It's just mainly like unbundling of a bundle that is trading, right? So they would just unbundle it to create a meme coin marketplace. I saw one of the protocols that you linked is pump.fun. Checked it out, very cool. You can create your own coin. You can look at coins that are, I think, below 70 million market cap or 70,000 market cap.
Yeah,
Um,
yeah.
but it's a fun place to see how often people create this, and that is, I think, I don't know if you can trade there with good liquidity, but you can definitely create and pump your coins. Is that one example of a vertical marketplace for memes?
Yeah, I think like it's definitely a meme coin platform as such. So like they identify the niche that like meme coins which are very young, they get a platform where they can get some attention, etc. I think like if you see like meme coins are also like kind of financialized attention as such. Like more the attention for a meme coin, like more it will pump, right? So that's the automatic thing. If you want to have more attention or engaging attention, you will have to create some engaging ways. Like right now most of the engagement is happening on Telegram, Reddit, or Twitter, which are like external platforms. So if someone can create a very engaging platform where they can discover meme coins, where they can see the charts, they can chat, etc., and they manage to have that, like you can say, retention or engagement, then automatically you are creating a social platform, but for meme coins, because you need to have chats there, you need to have such of like instant gratification where people can like or even trade there and so on. We will see like more and more platforms which are like kind of aggregating different parts of meme coin, but for a particular niche, like not generic. Because if you want to do like everything for everyone, then like it becomes like a lot of difficulties on finding the target niche or something like that. So I think yeah, we will see like vertical meme coin platforms, and like pump.fun is definitely one of those examples.
In terms of social tradings, prediction marketplaces also roughly fit your framework. Although they're not coins, you can use another coin to bet on an outcome of a social event. People did this with, I think,
Yeah,
the 2020 elections. People were betting using FTX. Polymarket, of course, is the main prediction marketplace now. Do you think prediction marketplaces are a big bet on social aspect of trading within crypto, and how do you see that evolve?
I think like so I've been like very bullish on prediction market from the past 2 3 years, but the traction has been very underwhelming. And only the traction has been like, even if you see poly markets, almost 90% of the volumes comes from one sector, which is politics. And like there's not much activities happening. So sports, like I was bullish on sports prediction markets, particularly that can come on chain, but that hasn't come on chain like for multiple reasons. And even for like normal prediction markets, so people in crypto like want like more uncapped returns. Like in prediction market offers you binary returns that you either like win such amount or lose such amount. That's not something like which such type of user persona wants. They want something more, like you can say, degenerate, and they want something which is more leveraged, that like can go even 100x, or it can go to zero. They don't want to have like binary options. That can be one of the reason. Another thing is like maybe like there hasn't been a very good team like which has like focused a lot on prediction markets and having that initial incentive flywheel kick in. Because I think like if you see most of the DeFi protocols at some time they were started by some incentives, right? So I think like there hasn't been like lot of incentives as well on the prediction market scene. So there can be multiple reasons, but yeah, for now like the prediction market thesis hasn't played out well. Like the traction is still like peanuts. So yeah.
So meme coins is the way social trading will go by and large, or you think anything else can eat away the attention that meme coins has been getting?
For now, like meme coins would be the way. Like NFTs can be another thing, but I think like if you see like NFTs are not that inclusive. Like you have to buy one NFT, which can be even like $10,000 or $100K, and like in meme coin you can even buy just $1 as well. And like even the trading is very simple because you don't have to pay any royalties. And like I think fungibility of meme coins is like one of the best thing, that like they are fungible, and that makes it much more tradable, and anyone can ape in. And like again, like in NFT you will have to like ape in different collections, etc. So I think another thing, like I was bullish on like Panora. So I think like they were like they kind of made like NFTs much more fungible. So I think like if someone can make NFTs much more fungible and much more tradable, that can be another bullish thing, where like they are having NFTs as a thing, but they are making it much more fungible and tending to meme coins. So I think like such types of standards can also arise, that people are creating more and more standards for like making NFTs much more liquid. Like I think like Blur, etc., Blur and Tensor on Solana, they have done a good job of like NFT making NFTs much more liquid. But yeah, I think the liquidity of NFTs and having that 5% royalties plus market fees, etc., like makes NFTs not much more inclusive. So I think like at least for the near future, meme coins would capture the most attention and even the most market cap as well.
So it's harder to understand an NFT compared to a meme coin, especially for someone who's just come in, whether they're just like, oh, this is a collection with 999 art pieces
Yeah,
and they're tradable and they're owned, and we'll give you a sweater because you own one or some shit like that, versus
yeah,
a picture of a cat with a hat or something that's easy to understand. But
yeah.
this has been a very useful conversation. I certainly learned a lot about Solana's deep infrastructure and their applications, not just in DeFi, but a lot of others. Just some parting thoughts. Is there anything that you are keenly looking forward to? Give me a sector or a protocol within a sector that you're keeping an eye on? Forget bullish or bearish, just keeping an eye on.
Yeah, so I think like on LST's Sanctum is one protocol I think definitely like to keep an eye out, because that's something like which is unique on Solana. So it's like kind of solving the liquidity problem for LST. Like it has a giant liquidity pool where like there are a lot of LSTs, and you can swap any LSTs to any LSTs. Like even you can go like swap $10 million of LSTs with like less than 0.1% of slippage. So I think like that's an interesting protocol. And another thing they offer is like kind of offering LST as a service. So let's say if you are running a validator and you can launch your own LSTs via Sanctum. So like let's say if you have a validator called Pure Sol, then like Pure, then like you can launch your own LST called Pure Sol. So I think like that's a very powerful thing, because that also leads to another thing that I generally want is like more and more LSTs in the Solana ecosystem, which also promote decentralization. So I think like that can be another way that single validator starts launching their own kind of LSTs as well. So Sanctum is an interesting play. Apart from that, like I'm more curious on like more and more permissionless RWAs coming on Solana. Obviously like, it won't happen in the next 6 months or so, but next in the next 1 year or 2 years, like I would see like definitely like more than five, 10 big RWA players coming on Solana and are doing more than $1 billion in TVL. So that's something I'm keen to watch on as well. Another thing I'm keen on is like the yield space evolving on Solana. So earlier Solana had this problem that like there wasn't enough capital, but now if you see, like there has been a lot of capital in the coming few months, and Solana is also now at $4 billion TVL. So I think like that will go up to 10, $15 billion of TVL, and people will then start caring about yields as well. So I think like the whole yield and yield derivative like space will grow on Solana. Like right now, it's very underdeveloped as compared to EVM ecosystem. So I think that's another space like I am, you can say, like keeping an eye out on that more and more developments will happen in that space, and we'll see like lot of yield opportunities there.
Awesome, man. Thanks for pointing those out. We'll keep an eye on them as well. Finally, just wanted to put this out there. How do people reach out to you in case they want to chat with you about Solana? Uh, could you drop in your top social platforms that you're active on and where you do most of your writing?
So I'm obviously like hyperactive on Twitter. So Twitter DMs would be one of the best way to reach out. Another way is like via Telegram. The username is same as the Twitter. And apart from that, like I keep writing on like right now I'm writing for Super Team Substack. Apart from that, I am also writing on my personal medium. So like my personal medium would be like one of the best places to check out all my writings. And apart from that, like yeah, I think like just following me on Twitter, and like I keep posting on Twitter, so that would be another best way to stay engaged with me.
Great. And we'll be sure to link all of those blogs as well as the Twitter account and the Solana dashboard that we have on Pure's website. We will link that as well. So if you want to look at any Solana related data, you can check it out. This has been a very fruitful conversation. Thanks everyone for listening. Thank you so much, Yash, for taking the time.